Hello, and welcome to another update video about Solana. Solana has still holding, or is still holding its position above the $108, the breakout level that we had. Okay, it was between 107, 108, this kind of range here. Solana is holding above that range, that previous breakout range indicated by the red line, which we also called an inverse head and shoulders pattern. I mean, you might want to call it that, and definitely it's a valid view, I think. And we've had a breakout, but not yet a substantial breakout, which is why I think the potential for a pullback is there. It doesn't mean a pullback happens, but the potential is there. I always point out the potential for pullbacks because that doesn't mean they will happen, but it's like, you know, we have a lot of pullback traders who are watching these videos, and you know, obviously you need to know where, you know, what other areas to look, you know, to look for. Sometimes pullbacks are shallow, especially in bullish markets. Sometimes they are a little bit deeper. Often they reach our support zones, sometimes not. That's fine. But that's why, you know, I don't call support regions targets, but the wave count allows us to understand what is the level that needs to hold in order to keep going with the current bullish perspective. So, but you know, I think if you look at this chart, you'll see that Solana hasn't really moved in significant or bullish ways since December, really. I mean, it's overall a long range now. And that shouldn't be a surprise. You know, I've said many times that the main part of the rally, or let's say the easy money, was probably already been collected here, you know, throughout this third wave rally to the upside that ended in December. Fifth wave rallies are always more difficult. Yeah, so if you are wondering why fifth wave, because if a fourth wave finished on the 23rd of January, the fifth wave is now unfolding. Obviously, that is also still subject to change. Okay, that could still change. I think this chart is still screaming actually for a lower wave 4. So I can only point out the risk, but I can give you a very clear level to watch. And as long as the $84 level is holding, I'm focusing overall on higher, and I assume the wave 4 finished. Below $84, I assume the wave 4 is still unfolding. And both are, I think, reasonable interpretations and reasonable perspectives. I've received a question from someone said someone else is counting this as a WXY to the upside, I think. Which, yeah, I mean, I've got that as well, but I just have it like an ABC. I haven't even labeled it. Like a 3-wave move in this B wave, in the white count, A, B, C. Can easily still come down, absolutely. I mean, there always has to be a level that when it breaks confirms something, an alternative. And I'm purely giving a bullish perspective the benefit of the doubt because we're holding support and the pullback reached minimum expectations. From a tactical point of view, I don't think it makes any difference if we come down once more or not, because this is the support region which could be used to find entries and for pullback traders. If you like to use that area, there was one here. And if we dip into the area again, you know, there's going to be another possibility, you know. It's clear, I think, hopefully at some point, it should get clear to everybody, that we always need to see a 5-wave move above resistance to confirm that a low is in. We've seen a 5-wave move, yes, but that 5-wave move is too small to confirm that wave 4 is in. I assume it because of that 5-wave move, but it could easily be an A, B, C and come down again, okay? So that is a possibility. Again, I always try to present it as simple as possible. Someone commented in the recent video that it was a bit complicated. I don't think it is. I mean, really, it's between the wave 4 is already in, and then we're heading all the way up to 190 plus. Or we reset the wave 4 a little bit lower. If that happens, probably in the area around $59 next, because the market respected already this support area. So just basically two scenarios. They're both bullish. Just in the second one, the alternative, the white count, it gives you a lower wave 4. All right, a deeper pullback, another opportunity to maybe scale in. I think a lot of people are actually looking forward to that, but I'm not sure if the market is going to give it to us. The main benefit of the analysis is not that it's a crystal ball, because it's not. It's that it gives you a clear level to watch. So a break below $84 at the moment would confirm that we're heading down again in wave 4 and that wave 4 never finished. All right? So that gives you a very clear level that distinguishes between the two scenarios. They are both bullish, but one of them is short-term bullish, one of them is short-term bearish. Yeah. And then within the short-term bullish scenario, but this is maybe where it's getting a bit complicated, and this is only for everybody who's really interested in the microstructure. So assuming wave 4 bottomed, okay, we are also in we have two other scenarios. So basically there is a primary perspective on the larger time frame, zoomed out, and an alternative, which would be a reset of wave 4. And then if we zoom in to our primary scenario, there are two more structures, because it can take a couple of ways and still be valid, okay? So for example, it's possible that after this low that was formed on the 23rd of January, a wave 1 formed, and this is just at the moment, again, in the white count, an A, B, C structure, and we dip back into the yellow support zone, which is why I keep the $84 level as relevant. So it would simply be a high B wave. Don't necessarily assume that, but I cannot ignore it. It is a reasonable interpretation, and therefore the $84 level stands between a rally to $190 and a drop down to 59. Okay, so that's a key level. In the very short term, there is the potential as well that the wave 2 already bottomed here. That was already the swing low. I think it was the 6th of February, and that we have another 1-2 set up here, but that's not so clear. And in this scenario, we have added another micro support, which is at 96.66. That means in very simple terms, as long as the 96.66 level is holding, a more directly bullish scenario is possible. Below that level, we are just likely going to test the lower support region, but then $84 is relevant. So two support levels, 96, 84, and then 59, basically is the third one. So this gives you 3 key levels to watch. And if you want to look at the chart as well, there are some other support levels above the key levels. I mean, the key levels are really the main ones, because only a break below these will change the scenario and means that the market is changing its mood. The ones above that, they could lead obviously to a bounce, okay? So hopefully that helps. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then also check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.